So the financial position of Nsl Ltd on the 1st of the 1st, 2005 is shown in the following balance sheet. So you can see the balance sheet there, and then it says the following transactions took place during 2005. So in January, Nsl Ltd bought an adjoining business which included buildings €120,000, debtors €10,000, and creditors €38,000. The purchase price was discharged by granting the seller 80,000 shares in Nsl Ltd at a premium of 20 cents per share. In February, Nsl Ltd decided to revalue land and buildings at €550,000, which includes land valued at €70,000 on the 28th of the 2nd, 2005. In March, management decided that the provision for bad debts should be raised to 6% of debtors. April, goods previously sold for €800 were returned. The selling price of these goods was cost plus 25%. A credit note was issued showing a deduction of 10% of the selling price as a restocking charge. In May, received a bank statement on May the 31st showing a credit transfer received of €4,800 to cover 10 months' rent in advance from May the 1st and a direct debit of €2,000 to cover fire insurance for the year ended 31st of the 3rd, 2006. In June, a payment of €630 was received from a debtor whose debt had been previously written off and who now wishes to trade with Nsl Ltd again. This represents 70% of the original debt, and the debtor had undertaken to pay the remainder of the debt by January 2006. In July, a creditor who was owed €500 by Nsl Ltd accepted equipment, the book value of which was €400, in full settlement of the debt. The equipment cost €900. In August, an interim dividend of 5 cents per share was paid on all paid up shares. In October, received €40,000 from the issue of the remaining shares. In November, received balance of previously written off bad debt as agreed in June. In December, the buildings are to be depreciated at the rate of 2% per annum of value at 28th of the 2nd, 2005. The total depreciation charge on equipment for the year was €9,700. Okay, so first things first, your question is going to look like that when you're finished. You will be given paper such as this one above in the exam. The step 1 is to lay out your tabular statement. So you've got all your months here at the top, and here at the side you have all of your assets and liabilities. So you should always leave a couple of spaces after your assets and liabilities for things that we might put in during the question, as you can see there. So you can pause the video there and get those figures taken down from the balance sheet. So make sure you understand where I'm getting the figures from. Okay, so let's get started with the transactions. So, January, Nsl Ltd bought an adjoining business which included buildings €120,000, debtors €10,000 and creditors €38,000. The purchase price was discharged by granting the seller 80,000 shares in Nsl Ltd at a premium of 20 cents per share. Okay, so into the buildings we put 120, into the debtors 10,000 and creditors 38,000. The purchase price was discharged by granting the seller 80,000 shares in Nsl Ltd. We look at the balance sheet and we see that the shares are €1 each, so 80,000 by €1 each, €80,000. And then what we need to do then is we need to find out how much the share premium is. So €80,000 multiplied by 20 cents per share, or by 20%, is €16,000 their share premium. Now, your assets and your liabilities need to be the same, but at this point in time, your liabilities are €134,000 there, whereas your assets are 120 plus 10, so that is €130,000. So the other €4,000 has to go into goodwill. So you create a goodwill account. What is goodwill? Goodwill is an intangible fixed asset. So when Nsl bought this business had an established reputation, had a certain amount of customers, it had good books that you can see that it's a very good business there. So 4,000 goes into goodwill, and then your assets and liabilities are both 134,000 euro. Then February, Nsl Ltd decided to revalue land and buildings at 550,000 euro, which includes land valued at 70,000 euro on the 28th of the 2nd, 2005. So the last day of February there. So the last day of February, why is that important? We'll need to know it's revalued at the last day of February when we're calculating our depreciation for the year. So I want you to underline in your question that land valued at 70,000, and I want you to draw an arrow down to December when they're asking you to depreciate the buildings, because we know we do not depreciate land, so we'll need to remember that that figure includes land 70,000. So our land and buildings altogether are 380,000. So they're to be revalued to 550,000. So that is 170,000 that we need to add to land and buildings there. Now, what we also need to do is cancel out any depreciation that had been charged on those buildings to date, which you can see here was 25,000. So we add in 25,000 to cancel that out. So altogether our total assets are 195,000 euro. And the revaluation reserve is 195,000 euro in the liabilities. So 195 and 195 there. So that's February done. Next we have March. So management decided that the provision for bad debts should be raised to 6% of debtors. So you are now looking at all of the debtors Nsl has, not just the 90,000 at the start in the balance sheet. So Nsl now has 100,000 euro debtors. So 100,000 by 6% is 6,000 euro. The bad debt provision at the start of the year was only 4,500. So we need to add another 1,500 to that. So we want to have minus 6,000 euro here. So we have to go another minus 1,500. Now, that is an increase in bad debts provision. And I want you to think about, what does an increase in bad debts provision do to our profit figure? It reduces our profit figure. So under our liabilities, we're going to have minus 1,500 here. So we've got 1,500 and 1,500 both minused there. Now we've got April. So goods previously sold for 800 euro were returned. The selling price of these goods was cost plus 25%. A credit note was issued showing a deduction of 10% of the selling price as a restocking charge. So, goods previously sold, 800 were returned. From who? They were returned from a debtor. So, let's add back in the stock. So we want to add back in the cost price of the goods returned, right, into the stock. So the goods, the selling price is 800. Divide that by 125%, multiply it by 100%. That is 640 euro was the stock there. Now we're going to minus 720 from the debtors. Why are we doing that? Well, we sold them for 800, but we charged them a 10% restocking charge. So 10% of that is 80 euro. So that is 720 euro altogether. So minus 720 from our debtors there. Now, down in the profit and loss, we are going to minus 80 here as well. Why is that? Well, when our debtor returned goods to us, we lost out on any profit that we had made when we previously made the sale. However, as you know here, we charged a restocking charge. So the amount of the profit is going to reduce by what the profit was, 160 euro, minus the 80 that was charged. So it's going to be reduced by 80 euro. Then moving on to May, we have received a bank statement on May the 31st showing a credit transfer received of 4,800 to cover 10 months rent in advance from May the 1st, and a direct debit of 2,000 euro to cover fire insurance for the year ended 31st of the 3rd, 2006. Okay, so first of all, we're going to look at the bank figures. So as I've mentioned before, the date that we receive the bank statement has absolutely no relevance to this question. The only thing that's relevant about it is that we're putting it in the May column. But bank statements have numerous transactions from many months in them. It's not just the 1 month. So forget about May 31st here because it's really irrelevant. Just remember in May, we're going to put it in May's column. So anyway, let's think about this. So 4,800 was received to cover 10 months rent receivable. So 4,800 is going to reduce the bank overdraft. So bank overdraft is going to be reduced by 4,800 there. So where else will I put that 4,800? So it's rent received, but we have to be careful about the dates. So it's received to cover 10 months rent in advance from May the 1st. So 10 months rent, we have May, June, July, August, September, October, November and December. So that is 8 months of the current year. That means at the end of the year, you're going to have 2 months rent receivable prepaid, which is a liability. So therefore, we're going to put rent receivable 4,800 into rent receivable under the liabilities. Now, 2,000 direct debit to cover fire insurance. What's that going to do to the bank account? Well, that is going to increase the liability bank overdraft. So plus 200 to the overdraft there. Now, that is to cover fire insurance for the year ended 31st of the 3rd, 2006. Now, we are doing this tabular statement for 2005. So if I pay for fire insurance up until the 3rd month of next year, that is insurance prepaid. So at the end of the year, I'm going to have insurance prepaid. So 2,000 is going to go up in insurance prepaid. Now note, I have no insurance prepaid here. Now, when we're doing the adjustment with the bank statement, we will go and we will do into one of our 2 December columns, we're going to do how much of the rent receivable and how much of the expense, which is the fire insurance, relates to the current year, which is 2005. So if we want to do the insurance first of all, so 2,000 insurance, but how much of it relates to 2005? So 2,000 multiplied by 9 over 12. And why is it 9 over 12? Because 3 months of it is for next year. So 2,000 by 9 over 12 is 1,500. So we're going to minus 1,500 from the 2,000 here. So we are going to have 3 months insurance prepaid here. So if you wanted to work that out, 2,000 multiplied by 3 over 12 is €500 there. Now, what would insurance paid do to my profit figure? That would reduce my profit figure. So down in the P&L, I'm going to minus 1,500 from here. Now, then we're going to look at the rent receivable. So 8 out of 10 months was for the current year. So 4,800 multiplied by 8 over 10 is 3,840. So I'm going to minus 3,840 from here. That means I'm going to have 2 months rent receivable prepaid. So 4,800 multiplied by 2 over 12 is 960 that you're going to have in your final 31st of the 12th column. And what does rent receivable do to your profit and loss figure? It increases your profit and loss figure. So 3,840 goes into your P&L and it's a positive there. So that's the May adjustment done. Next, we're looking at June. So a payment of €630 was received from a debtor whose debt had been previously written off and who now wishes to trade with Nsl Ltd again. This represents 70% of the original debt, and the debtor had undertaken to pay the remainder of the debt by January 2006. Okay, so the 630 was received. Where was that received? It was received into the bank account. So that reduces a bank overdraft, 630 then. Now, that represents 70% of the original debt. So 30% they have promised to pay us. So 630 divided by 70 multiplied by 30 tells us how much the debtor has yet to pay us. So we add into the debtor €270, which represents 30%. Now, when we have bad debts recovered, we want to record the 100% into the P&L. So bad debt recovered, we put that into the add operating income section of our question 1, which increases our profit figure. So bad debt recovered, the revenue, that goes into P&L. So that is June done. July, a creditor who was owed €500 by Nsl Ltd accepted equipment the book value of which was €400 in full settlement of the debt. The equipment cost €900. Okay, so a creditor who was owed 500 by Nsl was paid off in full. So what we're going to do, minus the creditor by €500 there. Now the accepted equipment, so we want to get rid of the equipment from the equipment account. What was the cost of the equipment? The equipment cost €900, so I take away the cost, €900 from the equipment. What I want to do then is I want to add the amount of the depreciation back in. So how much was the depreciation? Well, if the cost was €900 and the book value was €400, the depreciation is €500. So into the depreciation of equipment, €500 is going to go in here. So I have minus 400 there. So my creditors, I've already taken 500 away from them because my debt to the creditor has reduced by 500. What do I have to do? What's the other 100 that I have here in the P&L? Well, that is a discount received because the creditor was owed 500, but they accepted something that was worth 400. So 100 profit or discount received, whatever you want to call it. Either way, it increases the profit figure by 100. And so we have minus 400 and minus 400. Now, in August, an interim dividend of 5 cents per share was paid on all paid up shares, so issued shares. So 290,000 plus 80,000 is 370,000 shares. So 370,000 shares multiplied by 5% is €18,500 that is going to be paid to all shareholders as dividends. Now, where does this €18,500 come from? It comes from the bank. So from the bank figure, we're going to say plus another 18,500 because that is 18,500 more euro coming out of the bank. So that's been added to the bank overdraft. And what does dividends paid do to my profit and loss figure? Well, it reduces my profit and loss figure. So minus 18,500 here for my profit and loss. So that is August complete there. Then October says received €40,000 from the issue of the remaining shares. Now, it's very, very, very important that you go back and you look at the authorised shares in the balance sheet. So already we have 370,000 shares issued. So if you look back at the balance sheet, you'll see that there is 400,000 authorised shares. So we can only sell 30,000 more. So 30,000 euro goes into share capital because we can raise 30,000 by selling 30,000 €1 shares. So then the other 10,000 that was received must be share premium. So 30,000 and 10,000 is 40,000. Where did we get that? It was 40,000 received, so 40,000 into the bank. So that is going to reduce the bank overdraft. So bank under liabilities here, it's already a minus figure, but if money comes in, we're going to reduce the overdraft. So that is October. Now, November, received balance of previously written off bad debt as agreed in June. So going back to June here, that was when we had the bad debt recovered and the debtor has promised to pay us the remainder of the debt, which was €270. So in November, I'm going to minus the €270, and that is bad debt recovered. Okay, so we already recorded the whole bad debt recovered there, but the 270 is being reduced from the debtor. And where did we get that into? We received that into the bank, so that is going to reduce the bank overdraft by €270. Now, the last month then is December for the buildings. So the buildings are to be depreciated at the rate of 2% per annum of value at 28th of the 2nd, 2005. The total depreciation charge on equipment for the year was 9,700. So it's very important for us to remember here that the date was the 28th of the 2nd. So there was only 10 months of the year then that it's going to be depreciated at, because it was revalued at the end of the 2nd month. Now we also need to remember that the land was 70,000. So 550,000 minus the land 70,000 is 480,000. Multiplied by 2%, multiplied by 10 over 12 is €8,000. So that is the depreciation on the buildings. So from the buildings we take away €8,000. So in the depreciation buildings column. Now depreciation on buildings is going to reduce the P&L balance. So minus 8,000 is going to go in here. In addition to that, the total depreciation charge on equipment for the year was 9,700. So from the equipment, we take away 9,700 from the cost of it, and we also put that depreciation charge on equipment into the P&L figure. So overall, we have minus 17,700 in both the assets and the liabilities. So all you've left to do now is your total column. So if you want to pause the video and just tot everything up yourself and make sure you've got all of those figures as you can see in front of you.